Welcome to ForexTV.com. It's Friday, November 23rd. I'm Remy Hookey for New York Forex Market Buzz. In New York afternoon trade as of 12:45 p.m. Eastern Time, Euro-dollar is at 148.29 after hitting a new record earlier at 149.66. Meanwhile, sterling dollar is at 2.0594, while dollar yen is trading around 108.19 yen. Joining me now is Mark Chandler, Global Head of Currency Strategy at Brown Brothers Harriman. Good afternoon, Mark.
Good afternoon. Thank you, Remy.
Thanks for joining us this afternoon. Well, in today's holiday-shortened trading session, U.S. equities are seeing a rally on this Black Friday, and the U.S. dollar is off earlier lows and thin trading conditions, but broad-based negative sentiment remains for the greenback. Mark, with the dollar earlier falling below 108 and edging closer to the 150 level versus the euro, briefly give us your take on rate and global growth differentials.
Well, I do think that the major weight on the U.S. dollar are ideas that the Federal Reserve is going to cut rates again in December, and that the other major central banks are lagging a matter of months behind them. And so I think this is the major weight on the dollar, but we're seeing the price action today suggesting that the market may be getting a bit ahead of itself. We saw it pull back from, as you mentioned, the euro came close to the 150 level before pulling back, and dollar yen has bounced back as well from its lows. And the technical condition of the market may be suggested to some technicians that maybe a bottom in the dollar may be being formed. I'm not as confident of that. I'd like to wait until Monday to come to any major decision, seeing the price action. Yesterday's price action during the holiday thin markets was light, as well as today seems to be lighter than normal. So it's hard to know how much credence to put into the price action, but the euro technically has a key reversal day possibly going, where we made a new high for the move and then broke below yesterday's lows. I'm watching the 147, 67, 70 area, which was Wednesday's lows, and if we were to go through there, then I'd become more convinced that a reversal might really be in the works. But I think fundamentals still are dollar negative, and there's growth differentials and interest rate differentials.
Well, you briefly mentioned technicals and that trading conditions will get back into full swing on Monday. We'll have both the U.S. and Japanese markets coming back from their holidays. So looking ahead to the session on Monday, if you could give us your levels for dollar yen as well as the other high yielders against the greenback.
Well, I guess what I'm thinking is that I don't have a particular level in mind. What I'm looking at really is I want to see the price action. I want to see what the other guy does first. But as long as the euro holds above, say, the 147, 60 to 70 area, I think we're going to go back and test that 150 level. I'm not convinced that a serious dollar low is in place yet. And the same against the yen, of course, we tested that 107.55 area. I'm under the impression that there's a major optionality struck at 107.50. If we were to go through there, I think that would increase the likelihood that we move down towards maybe as low as 105 in dollar yen.
Well, let's briefly take a look at the commodity currencies. I'd like to mention that crude oil and gold futures are climbing in today's shortened session. But this week, we've seen massive moves for the Aussie as well as Kiwi and CAD. And as we do have the Australian elections tomorrow, if you could give us your forecast for the commodity currencies looking ahead.
That's right. You mentioned these as commodity currencies. I really don't think of them as commodity currencies in the current environment, though, of course, they do have some commodity elements. I think that what they have, different than the commodities, is momentum and high yields. So it's hard for me to isolate whether it's commodity-backed or whether it's momentum or whether it's interest rate-led, but those currencies do seem to be moving higher. I think that we should be looking at both the Australian dollar and the New Zealand dollars continue to move higher. I think that there's a good chance that after the elections that you mentioned this weekend, that sometime early next year, the Australians might be forced to raise interest rates again, while the New Zealand central bank seems to be done. And that really leaves Canada. I think Canada is, like the British pound, among the most overvalued currencies, and where the central banks seem to be the next likely candidates to cut rates following the Federal Reserve. While a Bank of Canada rate cut this year seems unlikely, a cut next year, early in the first quarter, seems more likely. In Britain, we've seen some dovish comments from the Deputy Governor Lomax, and while a rate cut next month can't be completely ruled out, I'd imagine that the January-February period is in a higher likelihood that they cut rates before then.
And last but not least, let's round out the discussion by taking a look at event risk and also the data front next week. Market players will continue to keep an eye on global equities, and we also do have Fed speakers here in the U.S. But Mark, what should traders in the Forex market be watching out for in the week ahead?
Well, I think that the key, as you mentioned, is how the global sort of appetite for risk goes, and as that goes, so goes equities and the carry trades, where people would be looking at selling the yen, selling the Swiss franc, selling the dollar, and buying higher yielding currencies against them. But I think that as the next week is the month end, and I think that we're likely to see the global stock markets bounce back. We've seen a major drawdowns. This month alone, for example, the Hong Kong stock market is down almost 10%. With the losses recorded yesterday, the Topix in Tokyo is off by roughly 20% from its February peak. We've seen that this has been a simply horrific week for global equities, and we're ending on a good tone in the U.S., which I think will be followed up next week by other equity markets. So in the big picture, what this would point to is a weakness in the low-yielding Japanese yen, Swiss franc, and dollar, strength in the high-yielding currencies, like we mentioned, the dollar block, like the Australian and New Zealand dollars, as well as in some of the emerging markets. I think that the week ahead we'll be really looking at the data that's pointing to what the forward-looking economic data, like the Chicago Purchasing Manager Survey, and other data that gives a handle on what's happening in the month of November.
Okay, Mark, thank you very much for insight and analysis this afternoon.
Thank you.
Have a great weekend. That wraps it up for your Forex Market Buzz with Mark Chandler, Global Head of Currency Strategy at Brown Brothers Harriman. I'm Remy Hookey. Join us later this afternoon for PM Exchange right here on ForexTV.com.